The cryptocurrency market is a roller coaster. It experiences periods of rapid growth followed by sudden downturns. This volatility is what both excites and scares investors. Understanding the forces at play is crucial for navigating this dynamic market. One of the most significant factors influencing cryptocurrency is the performance of the U.S. stock market. The correlation between the crypto market and the U.S. stock market has become increasingly apparent. When the stock market thrives, investors feel confident and often allocate more funds to riskier assets, including cryptocurrencies. However, when the stock market takes a hit, investors tend to withdraw from risk and move towards safer assets. This can lead to a decline in cryptocurrency prices. The current state of the crypto market reflects this interconnectedness. Global economic uncertainty and rising inflation have cast a shadow over both the stock market and the crypto market. As a result, we're seeing many cryptocurrencies, including major players like Bitcoin and Ethereum, struggling to break through resistance levels and facing significant downward pressure. This interconnectedness highlights the importance of closely monitoring both the crypto market and the broader financial markets. Understanding the interplay between these markets can provide valuable insights for making informed investment decisions. Bitcoin, the pioneer of cryptocurrencies, often sets the tone for the entire market. Its price movements can influence the direction of other cryptocurrencies. Currently, Bitcoin is facing significant resistance at a certain price level, say $30,000. This resistance level acts as a ceiling, preventing Bitcoin's price from rising further. Several factors contribute to this resistance. Large investors, often referred to as whales, may be selling their Bitcoin holdings around this price level, putting downward pressure on the price. Additionally, there might be a psychological barrier at this level, with traders hesitant to push the price higher. Breaking through this resistance is crucial for Bitcoin to initiate a sustained upward movement. If Bitcoin can successfully surpass this level, it could signal a bullish sentiment in the market, potentially leading to further gains. However, if Bitcoin fails to break through, it might indicate underlying weakness and could lead to a price correction. Traders and investors closely watch these resistance levels to make informed decisions. A break above resistance could present a buying opportunity, while a failure to break through might signal a chance to sell or short sell. Understanding these dynamics is essential for navigating the volatile world of Bitcoin trading. Ethereum, the second largest cryptocurrency by market capitalization, is also facing critical support levels. Support levels act as a floor, preventing the price from falling further. These levels are often determined by previous price lows or significant trading volumes. For Ethereum, the current critical support level is, let's say, $1,500. This level is crucial for Ethereum's short-term price trajectory. If Ethereum's price falls below this support level, it could trigger a wave of selling, potentially leading to further downside. Several factors could contribute to Ethereum's price falling below its support level. Negative sentiment in the broader crypto market, regulatory concerns, or technical factors could all weigh on Ethereum's price. Conversely, positive news, technological advancements, or increasing adoption could help Ethereum maintain its support and potentially reverse its downward trend. Traders and investors closely monitor these support levels to manage their risk. A break below support could be a sell signal, while a bounce off support might offer a buying opportunity. Understanding these dynamics is crucial for making informed trading decisions in the Ethereum market. Section 4. Solana, trapped in a bearish spiral. Solana, a high-performance blockchain known for its speed and scalability, has recently experienced a significant price decline. The cryptocurrency, which garnered attention for its rapid growth and innovative technology, is now facing a potential bearish continuation. Several factors have contributed to Solana's recent struggles. Concerns about network outages, competition from other Layer 1 blockchains, and the overall bearish sentiment in the crypto market have weighed on its price. As a result, Solana has struggled to regain its previous highs and is currently trading within a defined downtrend. The critical question for Solana is whether it can break free from this bearish spiral. A decisive move above its key resistance level could signal a potential trend reversal. However, if Solana continues to trade below this level, it might indicate further downside potential. Traders and investors are closely watching Solana's price action for any signs of a potential trend reversal. A break above resistance could present a buying opportunity, while a failure to break through might signal a chance to short sell or reduce exposure. Understanding these dynamics is essential for navigating the volatile world of Solana trading. Section 5 XRP Wrestling with Resistance. XRP, a cryptocurrency designed for fast and low-cost international payments, is also grappling with significant resistance levels. Despite its utility in facilitating cross-border transactions, XRP has faced its share of challenges, including regulatory scrutiny and competition from other payment-focused cryptocurrencies. Currently, XRP is encountering strong resistance at a specific price level. This resistance level acts as a formidable barrier, preventing XRP's price from advancing further. Factors contributing to this resistance include large sell orders at this price level, negative sentiment stemming from ongoing regulatory uncertainty, and a lack of significant positive catalysts. For XRP to overcome this resistance and initiate a sustained upward movement, it needs to break through this level decisively. This would require a surge in buying volume, positive news regarding its regulatory standing, or a broader market rally that lifts all boats. However, if XRP fails to break through, it could be in for further downside, potentially revisiting previous lows. Traders and investors are closely monitoring XRP's price action, looking for clues about its future direction. A break above resistance could signal a potential buying opportunity, while a failure to break through might warrant a more cautious approach, potentially involving selling or short selling. Section 6. Chainlink. A bearish divergence on the horizon. Chainlink, a decentralized Oracle network that connects smart contracts to real-world data, is showing signs of a potential bearish divergence. A bearish divergence occurs when the price of an asset makes a higher high, while a corresponding momentum indicator makes a lower high. In Chainlink's case, while its price has recently reached a new high, its Relative Strength Index, or RSI, a popular momentum indicator, has failed to confirm this strength, forming a lower high instead. This divergence suggests a potential weakening of momentum, which could foreshadow a price reversal. While a bearish divergence doesn't guarantee a price decline, it serves as a cautionary signal. Traders and investors often view it as an early warning sign that the current upward trend might be losing steam. If Chainlink's price breaks below its key support level, it could confirm this bearish divergence and potentially trigger a more significant downtrend. It's crucial to remember that technical analysis, including divergence patterns, should be used in conjunction with other forms of analysis, such as fundamental analysis and market sentiment. Combining these approaches can provide a more comprehensive view of an asset's potential price direction.